welcome back to another episode of Harbor Rock Wealth Management's Life, Health, and Wealth podcast, where we talk about financially driven topics and how they relate to our financial lifestyles. And we are always unconstrained and unscripted. This is Ruben Smith. I'm Jimmy Luster, and today we're here with Brandon Ratliff from Pelorus Financial Group. Thanks for being here, Brandon.
Good morning. Thanks for having me.
Welcome,
Appreciate
Brandon.
Thank
Happy
you.
to have you.
Thank you.
So before we dive in, we're getting some questions about our studio here, and it may look a little different in the last couple of episodes. So no, this is not real brick.
You're giving away the secret? You're giving away the sauce right now?
I want to let people know that we are not jet setting to the East Coast in some basement bar like Cheers or some wine room, even though it kind of looks like it. But instead of the house that Babe Ruth built, this is the house that Rube built. And I do have pictures to prove it. So we hope you're enjoying the set. We are indeed at Harbor Rock Studios, a.k.a. our third office that's being used for the podcast. So we hope you're all enjoying that.
Super comfortable.
What's the vibe,
space.
Brandon? Do you dig the
I
vibe?
love it. I love it. I think it's awesome.
Yeah.
I do feel like I'm in like a Boston brownstone, though. But yeah, it's
There you
super
go.
neat. Yeah.
Okay. All right.
Yeah. So
Well, it worked out.
So we hope our viewers are enjoying this. And Brandon, you're our third guest, and we've had various people on talking about real estate, insurance. In the first episode, it was Ruben and I sharing our story. So we're very happy to have you here today to provide some color on the topics of life insurance, disability, long-term care, things that we probably all eventually need in our life. We might not know quite a bit about them. So we're really happy for an expert like you and a trusted contact in front of Harbor Rock to provide some insights on that. But before we dive into that today, as promised, I always offer the viewers a sports stat of the day. I have three today. This day in sports history, Arnold Palmer became or reached the $1 million career earning mark. And yes, I'll repeat that, $1 million for Arnold Palmer in 1968. I didn't look up his total earnings, but I'm sure it's something quite large with how much sports people are making today.
Or underwhelming compared to what?
Maybe.
I was going to say, the British Open's going on right now.
Yeah.
They're easily going to triple that.
I would
whoever the
imagine
winner is.
he probably makes more off of his iced tea brand
The
in a
brand
day
being-
than he
Well,
made in
That's
1968,
probably
right?
a good point.
Yeah.
And we are kind of golf heavy. I also noticed in doing a little research this morning that Phil Mickelson won his first British Open on this day in sports history. Hank Aaron, 1973, hits his 700th home run.
Wow.
And Mike Tyson in 1989 knocked out Carl the Truth Williams in 93 seconds. And that became the fifth shortest bout in heavyweight history. So also pretty interesting. So
You came full of them today.
I
like
came prepared. So
It's a good day.
moving on from that, the star of the show, Brandon, why don't you tell us a little bit about how you got into the insurance industry?
Sure, yeah.
What fulfills you about the industry and what you enjoy about it particularly.
Sure, yeah. So, interestingly, I've been on the wholesale side of the industry my entire career, which is somewhat unique because most people don't really know the wholesale side exists. And I had just graduated from college and randomly answered an ad in the paper, and this is when they put ads in the paper for jobs.
Date
so,
yourself.
Yeah, yeah.
Circled it with a highlighter.
I
or
did. I
something?
circled
Yeah.
it with a highlighter, and I ended up interviewing with a gentleman that I still have a relationship with today.
Wow.
He had a general agency in a little town called Los Osos. I went to Cal Poly, and I got a job with him as a case manager, which is really just processing the business with the insurance companies. And it's evolved into now owning my own company and, working with all lines of protection-based coverage on the wholesale side and partnering with advisors nationwide like you guys here.
Well, congratulations.
Yeah, thank you.
About 20 years, right?
20 years, yeah. I've been in the business a little over 20 years.
And you're a little south of us down there in Encinitas, right?
Yep, based out of Encinitas, but because of the nature of the business, we're able to work with people all across the country and the
nationwide.
different time zones. So it's been wonderful. And you asked about what I like most about the business, and I think that really it's the relationships that we get to develop with the advisors like you guys. You get to know them, you get to know their practices, you get to know a little bit about their clientele and what they feel comfortable offering their clientele, and then we can bring in our products and help them complement their current planning. So it's just a great line of business, and I love what I do.
So that's an interesting dynamic that you talk about. Our viewers might have a question about that. Like, wait a minute, you don't work directly with the people, you work with the advisors.
Yeah.
Why is that important for us? I mean, it seems like a really complex topic and some of these solutions to understand.
Yeah.
And, someone like Ruben, who has quite a bit of experience in the planning field, over 20 years as CFP, and, you as the expert, how does that work with you advising us for our clients? Like, why is it important to have that specific expert in that field?
Well, I always present it as we're part of your team, right? So, you guys are experts in your side of the business. You can't be experts in everything. So as we being part of your team, you can rely on us to know product, to know underwriting, to know, what the best solution is, protection solution for your clients. So it's just a matter of being able to lean on, somebody else that will focus on that so you can turn your attentions to, doing what you do best.
Sure.
Well,
And
oh, sorry. I mean, I know enough to be dangerous, right? And I say that, but I say that jokingly, but it's our job as the advisor to find out where there's a hole in a client's financial plan, whether it's on the insurance side, asset allocation, you name it. Okay. But when it comes to insurance, I've always felt that it deserves it. It's its own separate animal.
Sure.
And it's its own separate field within the financial services industry, where you need to be an expert to make sure you're delivering the right policy or the right type of insurance policy structure, you name it. So that's really where I found it beneficial to partner with Pelorus is I know when there's an opportunity for a client, and I know where there's a hole in the plan, and then we will rely on Brandon and his team to structure the appropriate coverage and policy.
Kind of going back to, we're the general practitioners and we have this expert team, this network of superheroes in the financial industry that we can lean on to really get granular and provide that expert insight.
Absolutely. Absolutely. And, when we're talking about a solution for one of our advisors' clients, we're also, going and getting the feedback from the advisors. Like, okay, tell me a little bit about your client. Tell me what their risk tolerance is. Tell me what their needs are. And then we bounce everything off the advisor. And it kind of goes back and forth because we're not just going to dictate what we think the solution should be. It's a matter of, collaboratively going and deciding with the advisor what that solution should be and presenting it to the client. So it's a team effort.
Definitely. And it's not a one size fits all. It's like we just do whole life insurance, or we just do certain types of long-term care.
Sure, I like this. I enjoy doing this, so I'm just going to put everyone in this bucket.
Yeah.
Obviously, it's not that way.
Absolutely.
So why Pelorus? I actually had to ask you this when I first met you, and you gave me a little insight as to how that came about and what that means and what's the significance of Pelorus.
Yeah, so when I decided to branch out on my own and start my own agency, my wife and I were talking about it, and we're like, okay, what would be a good, meaningful name for the agency? And one of the things we really pride ourselves on is, number one, having a strong ethical compass, right? So being able to make decisions that we feel are in the best interest of our advisors' clients and our advisors, and also being able to guide them through situations that they may need some assistance on. So we thought about, okay, what would be a good name? And when we were going through, we found a Pelorus, and a Pelorus is a navigational tool that was used to keep ships on a direct track.
Cool.
And so we're like, you know what? Okay, that Pelorus would be a great name because we're going to help our advisors keep their clients on the right track.
Yep.
Hence the name Pelorus. So,
yeah, great.
Yeah.
Well, that's a perfect segue into staying on track with various solutions and and providing the right advice when people are looking for these various solutions for insurance and things of that nature, these protective vehicles, as you were explaining. Why don't we go ahead and move into different kinds of solutions here, and maybe when they're appropriate, how they apply. And I know, Ruben, you had a couple of topics that you wanted to touch on in this.
Yeah, so I think the three insurance products that we partner with Pelorus on are life insurance, disability, and long-term care insurance. And I'd like to go through each of them and spend a few minutes on them and talk about why life insurance, appropriate levels of coverage. It's been my experience, at least, when you dig into this with clients and creating their financial plan, that they're often underinsured.
Yeah.
Or there's not an appropriate level of insurance, maybe too much insurance. In some cases with life insurance, or
Yep.
so let's start with life insurance. What's on a very broad scale, what are you insuring what's the point of life insurance?
Well, life insurance, of course, is insuring somebody's life from premature death or from expiration in general. So it depends upon what the need for the coverage is. You have oftentimes a product called term life insurance, which is used for a finite coverage period. So if you have a 30-year mortgage, you're going to go ahead and take out 30-year term insurance. If you have a business and you're trying to protect it from premature death of a business owner, you might look at 10-year term insurance, something that's going to provide that finite coverage. It's going to cover the business owner. It's going to cover the family in the event of a premature death. And then you have permanent coverage, and that's something that is going to be, I guess you'd call it longevity coverage. It'll be there when that person expires in 5 years or 50 years. It doesn't matter. And those types of plans are usually used more for asset leverage, wealth protection, intergenerational planning. On a business standpoint, we use it for executive bonus, sometimes for employee retention. It just depends. There's a number of different uses for life insurance. And also there's the tax deferred accumulation of the cash value in permanent policies that helps for tax favorable income down the road for clients as well. So a mix of everything.
Yeah, I think a lot of people have heard the term the idea of term versus perm.
Yeah.
And I think for the most part, clients understand that term is cheaper.
Yes.
Even though it's cheaper and more cost effective, it may not be the most appropriate considering their overall financial picture and what their end goals are. So as far as the amount of coverage, it's really an arbitrary calculation. It depends on the client specifically.
Sure.
So you could be married, you could have young kids, you could maybe you're considering replacing the breadwinner's income. How many years do you do that? So there's a number of factors that go into that, and that's where we come to the table and deciding on what the appropriate level of coverage is. Looking at the client's overall how they can handle the cost of that and how they would fund it. And then from there is where we focus in on the type of coverage that's best for them.
Yeah. And term insurance is one of those coverage where, in fact, we were talking about, James, a little bit ago about, with term insurance, it's one of the few things in life that you hope you waste your money on, right? Because the odds of it ever coming to fruition are very limited. I think that term insurance policies pay out like 1% of the time, maybe 2%. So most policies,
which is great news.
Yeah, right. Great news. Yeah, I mean it's good news for everyone: the consumer, the insured, and the insurance company. Yeah, exactly.
So why? Is it to help me sleep better at night? I mean, I was discussing 100%. This with my wife, and I was saying, hey, look, we have a great partner that we're working with, and I've gotten a little information, and I'm considering doing this, and she's like, well, yeah, it's kind of a tough topic to talk about. It's something that I hope I never have that happen, Jim. And I'm like, well, me too. But hey, I think this is a responsible thing to do. I want to maybe leave you in a good spot if something were to happen to me, and who knows, maybe we have a policy on you too. And so those discussions aren't always easy. But I mean, I feel like I was adulting a little bit more when I was having this conversation.
I think that insurance is cover the unknowns and to protect from the unknowns, and those unknowns do happen, and we pray they don't happen to us, right?
Right.
But they do happen to people, and so if you have a situation where if you have a young family and they've got 2 children and you lose one of the primary breadwinners, what's that surviving spouse going to do? Well, they're going to have to take care of those children. There's the grieving period. There's a loss of income, and having the means to be able to kind of get through that patch, I think, is hugely important for the sanity of that family.
I was going to say, they're grieving. They're having to do a lot of things and take care of a lot of business aside from grieving their loved one or handling that kind of business.
And then they don't have to go out to the internet and go on a GoFundMe, and try to raise money, based on people's sympathy. I mean, it's a matter of proper planning. And then I think that permanent coverage too is hugely important. And we can have that conversation if we want to do that further down the road or
Sure.
whatever. But I mean, there's the need for both lines of life insurance coverage, and I think that I'm a big believer in that.
Well, you can get a lot more creative, in my opinion, with more permanent coverages, right? And just full disclosure on my personal plan is I currently have a term policy, but it's also part of my plan to convert a portion of that into
Sure.
a permanent
Yeah.
into a permanent policy. But that's probably a topic for another episode.
Yeah.
So
you can change that.
the other level of insurance that we often work with you on is disability insurance, and I think of this as is loss, or you're insuring your paycheck. Let's
Correct.
put it
Yeah.
that way.
Yep. Absolutely. And an advisor that have worked with for years, once told me, he said, life insurance is the selfless sale, right? Because you're never going to see the benefit or proceeds of life insurance. Disability is the selfish sale. And so when you say loss of paycheck, that's exactly what it is. So disability is going to allow you to maintain your lifestyle in the event of a disability. And disability policies pay out quite a bit more often than life insurance policies. So somebody's likelihood of being disabled is, I think it was like 20%,
wow.
yeah, which is pretty substantial. And, general rule of thumb is that, you're going to insure yourself for 60% of what your income is, up to a cap. I mean, there's caps for very high income earners, but 60%. And that's because disability payments are income tax free. So they're saying, okay, you know what, we'll give you 60% because you're not paying any income tax, no state tax. And, that's going to allow you to maintain your lifestyle. So,
And there's a couple of different ways that you can structure those policies, so you can be very specific as far as your occupation.
Yep.
Or any occupation. And obviously any occupation means if I'm disabled and I can't be a financial advisor, does that mean I can't be a store clerk somewhere? Or now that's a little bit more broad. So
Or a podcast expert.
or a professional podcaster.
sure.
Right,
Yeah,
exactly.
Yeah.
So with more broad definition there, that's going to be cheaper because the likelihood of you being permanently disabled and not being able to be actively employed is smaller than being able to do just your profession, right?
Yeah, and most of the contracts we work with are going to be worded such that they're not going to force you to go to work, as a store clerk if you were a financial advisor.
Oh, okay.
They're going to allow you to be totally disabled if you cannot perform the duties of your occupation. Now, there are some other more technical contracts that would allow you to say, okay, well, I can't be a surgeon anymore, but I can teach. So I'm going to receive my disability benefits as a surgeon, but I'm going to go teach. And I'm going to receive income from teaching. And it's, kind of like double dipping.
Is there a limitation there? I'm just that just sparks something in my mind. Like,
No. I mean,
can I now go? What if I have an opportunity to go earn even more than I was earning with my occupation that
Sure.
I'm now disabled?
Yeah.
There's
You could
no
be a professional baseball player.
Sure, I get back in the game. I get back.
I
Hey,
can't
the
do
Angels.
surgery, but I can hit.
I think I could still hit 260.
Yeah,
I think
yeah,
maybe
yeah.
in the. I don't know.
But yeah, no, it's just a matter of the contract. So with disability insurance, knowing the contract, knowing the verbiage in the contract, knowing how, those items work is very important to understand because there are differences. And, a benefit that a lot of employers provide to their employees is group disability insurance, right? So group disability insurance is great, it's fabulous, but it's not as comprehensive as an individual plan. So, if you sit down with Ruben or James, I think it'd be important to kind of know, okay, what does my group plan actually cover? Is it going to be total disability, permanent disability? Is it, is it 60%? Is it taxable? There's a lot of different nuances to group disability.
Right. And so then the last insurance policy that I want to talk about is long-term care insurance, and it's something that I've prided myself on modeling in every client's financial plan. I've even in my career I've gotten some grief over it at other firms when presenting to my peers when I model long-term care events, and there was a point when people were laughing in the back of the room as I was presenting, and I asked them why, and the reason was because I blew up their financial plan. How are you going to get a sale?
Yeah,
how are you going to invest?
Why would you
money?
bring that up? Yeah, how depressing.
So that that goes into being the fiduciary, making sure you're looking at everything, holistically as far as potential concerns or shortfalls in their plan.
Yeah.
So long-term care is it seems like it's either you love it or you hate it. You know, a lot of people have now had experiences with personal loved ones that have been through a long-term care event. So let's talk about long-term care, because it is a different animal in the sense of, from an insurance standpoint, it's hard to price. So you have a lot of companies
Yeah.
in and out of the business, and there's also different types of coverage. So
Yeah.
where do you want to start? You want to start with more of like a traditional type policy where it's a use it or lose it? Or?
Yeah. So there, the first, I think, onset of long-term care in the 70s was what we call traditional long-term care policy, where, if you had a long-term care event, the long-term care policy would pay a monthly or daily benefit to that insured or to whoever's providing services to that insured for a finite period of time, 3 years, 4 years, 5 years, 6 years. When long-term care was introduced, they also had some very strong contracts. So you could pay it up in 10 years. You could have an unlimited benefit. There was all these contracts that unfortunately proved to be not maintainable for the insurance companies. So what they found is they actuarially underpriced these products substantially because people were not letting them lapse. People were actually using these long-term care policies. And for the insurance companies, it was
So they were
nightmare.
losing. Yeah.
Yeah, they were losing. And in a lot of cases, we've seen the primary long-term care players exit the long-term care space or the insurance market entirely.
Right.
Now, they can't negate or cancel their existing contracts, but for the ones that aren't guaranteed, they allow the state will allow for rate increases. And so we've seen a lot of these premiums double, some of them triple. And so when it comes to traditional long-term care, there are very few players left in this business. And what we've seen the shift go to are what we call asset-based long-term care policies. So it's a life insurance chassis with a long-term care component that will allow for full guarantees in that contract. So insureds aren't going to get stuck with a premium increase notice when they're 83 years old. And the way that we can structure them is we can structure them with, a benefit period up to 6 years. We even have some that have unlimited benefit periods. We have short pay scenarios. We've got all pay scenarios. But in my opinion, the most attractive and important part of those contracts are the full guarantees. And, when you have full guarantees, the insurance company cannot manipulate. They cannot say, oh my goodness, we miscalculated this, our actuaries were way off. So that's the evolution that we've seen in long-term care. And right now, I would say 99% of our policies for long-term care are asset-based or linked benefit long-term
More of
care.
these hybrid type policies. Yeah. And unfortunately, I've assisted clients over the years with purchasing traditional long-term care insurance, and they're now at the point where they're getting some rate increases. They're getting these annual notices where over the next 3 years it's going to go up. Now, the asset-based programs aren't necessarily for everyone either, because it's all based off of, do you have the assets to fund these? Oftentimes it takes larger upfront premiums or lump sums even to fund them. So go ahead.
I was going to say that is actually evolving as well.
Oh, good.
Yeah. So we're in the state of California right now. California Insurance Department is notoriously slow for approving products. But outside of California and recently in California, they approved an asset-based long-term care products for clients of certain ages. I think it's under age 65 that can be a full pay, an all pay. Okay. And if you're going to compare those premiums with a traditional long-term care policy, they're going to be comparable. Okay. So it's a great solution that just introduced. And outside of California, we just had that product, but it's on a joint life. So you can have a shared pool of money for both insured. So husband and wife, or partners, whatever it might be, you can use that shared pool of money, which is a fabulous way to kind of blend the morbidity and mortality charges to get a lower premium for the client and more leverage to long-term care.
So the last point on that is, with a traditional policy, it is a use it or lose it. Right?
Yes, correct.
It's like fire insurance on your house. If the house doesn't burn, well, you're not getting that money back. If you pass away, it's not going to go to your beneficiaries, anything like that. And these, I call them hybrid policies, but these other policies where you're using an insurance chassis to fund them, if there is not a long-term care event, there is going to be some type of residual payment back to or death benefit back to
Yeah,
the
correct.
beneficiary.
Usually it's a return of death benefit or a return of premium, excuse me.
Okay.
So, if they paid over the life of the policy $100,000, then they would have a $100,000 death benefit that would go to their beneficiaries. And, a lot of people find that attractive. And then oftentimes there's a residual death benefit. If they exhausted 100% of the benefits, there still might be a 10 or 20% residual death benefit depending upon the product.
So it sounds like it's getting more flexible as far as going out and pricing individual or traditional policies with long-term care.
Yeah,
'Cause
absolutely.
there was quite the turnstile as far as insurance providers, and one of the ones that was been in the business forever. I was surprised that when we came and opened our shop here at Harbor Rock that they're no longer in the business.
Yeah.
At our prior firm, I wasn't allowed to do insurance services, so in those 8 years that I had been out of the business, so to speak, I was surprised to hear that they were gone.
Wow. Yeah, I think I know who you're speaking of, and
Yep.
I'm amazed. I'm amazed. But their contracts are still in the books. And
All
they're
all the contracts are still
servicing
there.
those contracts.
That doesn't mean they're not going through some rate increases
Yeah,
and things too. So
Yeah. The other thing I'll mention about long-term care is that, we in California are expecting to see a state-funded or sponsored long-term care program come down the pipe, which I think can be advantageous for many people, but it can also be detrimental because it will be funded by an income tax. And that's going to be, from our understanding, is an income tax on all forms of income, retirement income, earned income.
now, will that be a payroll
Dividend
deduction
income.
tax?
I don't believe so.
Okay,
I
wow.
don't believe so.
Okay.
I'm not 100% sure it's still in the works, but from what I've been told is it will be a true income tax.
Yeah, I remember you sending me that article on that. I'm glad you brought that up. I don't know if it's going to be for everyone. It sounds like in that article that you sent, there was potentially going to be a way for people to opt out if they didn't want to participate too. So
I think that they can opt out if they have existing long-term care that satisfies a requirement that the state is going to dictate. So right now, based on industry experts, I've been told we're going to see a benefit of somewhere between $3,100 to $6,000 a month, and a benefit period of at least 2 years, potentially being adjusted for inflation. So for somebody who doesn't have the ability to get long-term care, it's a fabulous program.
I mean, to qualify.
Correct. Qualify or the means, because if somebody doesn't have the means, it'll help them, kind of put a hole in any assets that might be bled for long-term care services. But for somebody who does have the means or has the income over certain levels, they're going to be paying way more for the state program, which will provide likely a lesser benefit than if they were to go out on their own and purchase it and opt out of the program.
Right. I think we'll have you back to talk specifically on long-term care because there's so many other avenues we can go down with this as far as types of care, in-home, the levels of benefits provided.
I feel a repeat guest happening. You ever have those moments that you find out when other people are smarter than you? I just had that moment right now when you guys were talking. I'm really glad that I know you guys. No, and this is just a perfect example of how intricate and detailed, especially like something like long-term care, can be. And navigating that, can you imagine doing that on your own? How are you going to do that?
No, and I think having an advocate from a insurance company standpoint when you do have a long-term care event is super important because you have two types of long-term care plans, which we can go through when we have our further discussion. But you have indemnity and reimbursement, whereas reimbursement, the insurance company is reimbursing the facility or the service provider, whereas indemnity provides a cash benefit, which can provide a lot more flexibility. So we'll get into the weeds.
Sure.
If you guys are willing to have me back, and we'll have that conversation.
Absolutely. I look forward to it.
So I have a couple questions.
Sure.
Ruben, did you have some more?
No, go for it.
So I'm considering applying for, and I'm asking this on behalf of our viewers and myself. I'm learning more about this too. So I'm considering applying for term life insurance or some life insurance in some regard. And I find out I have to take a medical exam. So why do I have to take a medical exam, and what goes into that?
So the insurance company is going to want to make sure that they're taking on a worthy risk, right? They don't want to take on an adverse risk that they did not properly price or prepare for. So if you do have to take a medical exam, what they're going to do is they're going to do physical measurements. They're going to ask you about your health history. And they're also going to take a blood specimen and a urine specimen. So in the urine, they're looking for cocaine, which is, nicotine. They're looking to see if any drugs show up in the urine, if there are any, abnormalities with your kidney functions, things like that. And then with the blood, they're doing a panel. It's not a full panel, but they're going to check cholesterol levels, liver functions, glucose. They're going to look at other potential cardiac markers and, there's things that they can potentially evaluate a risk with.
Okay.
Yeah. And, they're just going to want to make sure they can kind of fully evaluate. And if they feel as though they may need to order medical records, they will.
Okay. Yeah. So let's say I'm asking on behalf of someone I know, but let's say I'm a former,
really well.
Let's say I'm a former athlete. Is there a mirror? Let's say I'm a former athlete and, I'm not in awful shape. I can still hang, but I feel that I could better my lifestyle a little bit and get a little healthier. And maybe I have this in my mind that maybe I'll save a little money on my premiums. And if I was applying when I'm at a healthier state, do you find that people, actually have that frame of mind, and is it worth doing that? Like waiting, or what's the risk of potentially waiting, another year while I get my lifestyle in better order?
We certainly have that conversation with advisors on a pretty regular basis when their clients say, oh, you know what, he's 10 pounds over, for the guidelines for preferred or
Sure.
the best class, let's think about losing the weight and then coming back. And, I say, okay, well, that's fine, but do they have current coverage? If they're replacing a policy, sure, by all means, you could potentially, explore weight loss or trying to get into shape. But if you don't, insurance is to cover a risk, and you don't know when that insurance is going to be needed. So putting it off is not wise, especially because the premium savings is probably going to be so nominal compared to what the potential risk that you're covering could be.
Sure.
In addition, you have the ability when you put an insurance contract in force to come back for what they call reconsideration. So, if you have lost 30 pounds in the last 12 months or 18 months, you can come back after your first policy anniversary and say, hey, Mr. Underwriter, I lost this weight. They're going to ask you to fill out a new form application, and they'll evaluate your risk again. And they'll say, oh, okay, you know what? We feel as though we can improve your offer, but they cannot rescind your original policy if your health is worse.
Yeah, that's good.
Yeah.
Good to know.
Yeah.
Yeah, I like that.
Yeah.
So briefly, the unforeseens happened.
Yeah.
Let's say a policy is going to be now paid out.
Okay.
What happens there? Someone's passed.
Yeah.
Now what happens?
Yeah. I would imagine for most people in most states, it's a very, confusing and emotional time, right? Sure. So that's when you're going to need your hand to be held. You're going to need a little bit of help. When there is a claim, the insurance companies require those claims to be initiated by the actual policy owner, which is something that the advisor can assist with as far as providing the contact information. But at the end of the day, the insurance company will communicate with the policy owner. They're going to ask for a copy of the death certificate. They're going to FedEx some paperwork that the policy owner will complete and then send it back to the insurance company for the death claim process.
Do they still hand deliver a death benefit or life insurance claim?
I think that there may be some insurance companies that have captive agents that may allow them to hand deliver checks, but most cases it's just either, like a wire, or it could be a, physical check being overnighted. Or the insurance company will say, hey, you know what, we can hold this and kind of create this annuity for you, and you can draw off it, as you see fit, and we'll give you this interest rate. So there's different ways to process a death claim.
I always thought that would be a very powerful moment with a client when you're hand delivering a life insurance check to someone who just lost a loved one.
Unreal.
Yeah, 100%.
Yeah.
Thankfully, and I've never had to do that, but I just thought.
Yeah, and in years past or generations past, maybe they did do that.
Yeah.
And I have a powerful story I'll share with you guys off the air that I think is relating to hand delivering that life insurance check, because it does happen. There are death claims. People do die prematurely, young people, old people, and life insurance death benefits do get paid out.
Sure. Let's talk about finally the future of our business and the value of the human element.
Mm-hmm.
More and more today, luckily, we're seeing advances in technology.
Yeah.
Right? We're right in the middle of a lot of things. AI is looming. That's a big buzzword. There's a lot of people that may be fearful of it. There's a lot of people that are seeing positive impacts of it. So as we continue to progress technologically, do you think our business might become us and our business might become obsolete, like the power of the handshake or the human element? Or do you think some of these younger generations are going to be more accepting and adaptive to DIYing and finding information on their own? Have you seen anything happening already there? And how do you feel about that?
Yeah, no, I certainly have. And I do think that there will be an element of that, consumer independence that we will certainly see. But I think 100% that, the human touch, the personal interaction part of the business will be something that will be here to stay. I mean, I'm a big believer that, you know, I'm in the service business. I am in the service business to support my advisors I work with and help them support their clients. So it's answering calls, it's being responsive, it's helping with death claims, it's helping with, getting medical records, whatever it might be. And there will always be a need for somebody to be able to provide service because people like service, right? When you go to, the Four Seasons, why are you going to the Four Seasons? You're going because of the service. Now you might be able to choose a hotel that, is just going to let you do it all on your own, but you're going there because you want the service.
Mm-hmm.
And so I think there always will be a need for us in the business as well as advisors like yourselves, where clients need some guidance. They don't want to take on all that risk and they don't want the burden to lie on them entirely.
Or like a certain type of client,
Yeah.
right? Might really say, oh, no.
Yeah.
Like you said, it's the Four Seasons. Like
Yeah.
it's timeless.
Yep.
There's always going to be a need at some point for that type of expertise.
Yeah. 100%.
And the human touch.
And I do think that there will be, and there is a place for the transactional side of our business.
Sure.
As far as the client that says, I just need $1 million term policy and they're 28 years old and, they're just getting it and it's a transaction. Because the insurance companies have, since COVID, have been really working hard towards creating a more transactional process for these like smaller term type sales where, a lot of it is now through web-based underwriting where they're scraping the databases for public information, for your health history that's online, for, your MVR, your prescription check, and they can more or less underwrite a case and say, okay, in 30 seconds, they gather all this data and they can say, okay, Brandon, we're going to approve, your $2 million policy without anything further. No red flags came up. You're done. And from a transactional standpoint, it's profitable for the insurance company.
Sure.
There's still an agent, so it's profitable for the agent and it protects the consumer. But then there's multiple situations where there is the need for conversation. There is a need for guidance.
Well, yeah, was $2 million the appropriate level of insurance? Who
Yeah.
counseled them on that part? Yeah.
Yeah, absolutely. Absolutely. And did they choose the right carrier? Is it a policy that's convertible? Did they out-waiver a premium? There's all these things that are likely not being addressed if you just go on, a website and press a button and it goes through an algorithm. I mean, albeit you'll have protection, but is it enough? Is it sound? Will it provide you with the solutions down the road?
Sure. Well, I know I learned a lot today, and I'm sure our viewers did too. So we're about to wrap up today. You're a wonderful guest, and it sounds like you're definitely going to be here again, at least one more time to elaborate on some of these topics. And we appreciate you being a friend of Harbor Rock and a valued contact. And to our viewers, thank you again for joining us in our digital barbershop, and we'll see you next time.
Yeah, thank you so much for having me. I appreciate it.
You bet.
Yeah.